Hi there. In this screencast, we're going to start into our unit on income taxes. So the old saying goes, the only things that are certain in life are death and taxes. And so paying your taxes will play a very important role or be an important aspect of your finances. So let's look at first of all, what kind of taxes you're going to be paying. So there'll be a couple different categories of taxes. Property taxes, and these are paid if you own property. If you do not own property, and when I say property, I mean real estate, then you won't pay property tax. Sales tax, I think everybody knows what sales tax is. It's the extra amount that you pay um, uh, when you buy something. And then finally, income taxes. So income taxes are computed based on what your income is. So where do these what is funded by these taxes? Well, property taxes are used almost exclusively to fund schools. They're paid locally to the township that you live in, and that money is collected and used to fund school districts. So the property taxes people in Roxbury pay actually pay for the Roxbury schools and even pay for my salary as part of that. Then sales tax. So what does sales tax go to? Sales tax typically goes to the state, and it's used as one of the kinds of taxes that fund state government. Um, Sales tax is not national or not federal, so it does not go to Washington, D.C. It goes to the state only, and that's why each state has its own sales tax percentage rate. New Jersey's used to be lower. It's now higher. They raised it recently, a couple years ago. And then finally, income tax. Now, many states have an income tax. New Jersey is one of them. In fact, the majority of states have income taxes. There are a couple that do not. I think Texas and Tennessee and Florida are three of them. And then, of course, there's the federal income tax. So federal income taxes are used to fund the national defense, so the armed forces. They're used to fund all kinds of different services that are provided to American citizens. One right now is the Center for Disease Control, particularly relevant. You also have the Department of Education, so some income taxes go to specific school districts to kind of help local municipalities pay for their schools. There's all the organizations that regulate, like the energy, pollution. There's all kinds of different departments of the federal government, and these are all funded by federal income taxes, as are all the salaries of all federal workers, including the president and his entire administration. So the IRS is the governmental organization that oversees the collection of federal income taxes. Also known as the Internal Revenue Service, that is the IRS. So when you hear IRS, it's the department of the government that's collecting taxes. So when you file your income taxes are based on how much you earn. Now, a little bit later, we'll get into some of the more sophisticated rules of federal taxes. For now, we're going to take the simplest case, and that is you are a single person and you cannot itemize your deductions. That means you don't have a large amount of property taxes you're paying or state income taxes, I think those are the two main categories of things that you can deduct. There's also money that you give, that you donate. There's a variety of things that you can deduct, but we're not going to get into deductions right now. For now, we're going to do a simple case of someone who is unmarried and is going to take the standard deduction when they're doing their taxes. So, So what are the tax brackets? So basically, as you make more money, the government starts taxing you at a greater percentage rate. So, and the reason that the federal government does that is in the interest of fairness to people who are at the low end of income. Those people are paying, need all the money they can get to pay for basic expenses. So, to be kind to them, they're taxed at a lower rate. But as you make more and more money, you're taxed at a higher rate. And I think the rationale is people who are making a lot of money, well, everything's icing on the cake beyond a certain amount. So, wills and, luxury spending. So, those people, taxing them at a higher rate isn't going to really hurt their lifestyle or how they're functioning. Now, some people don't believe in this system, and a lot of people believe in flat tax, where everyone pays the same rate no matter what. That's not the way the current federal income taxes work. They work by having tax brackets based on how much money you're earning. Now, these have changed. Recently, in 2018, they did a major overhaul of the tax brackets and federal income taxes. You may have remember this was in the news a lot back then. And basically how all these what the boundaries are on these tax brackets and what percentage you're paying of taxes in the tax bracket, it has a big impact on how much money you're going to get to keep or how much money you're going to pay the federal government. So there's a lot of contention about what these tax brackets are. Does it benefit the poor? Does it benefit the rich? That's why there was a lot of controversy when they were redoing them. So now, what does this mean? If you want to do a graph of your income, so let's say that here, let me go into Desmos and bring up a little graph. So tax brackets and the tax you pay in them are linear. That means that you pay a fixed percent no matter how much money you're for every dollar within that tax bracket. And basically what's going to happen if we did a graph of your income as the x-axis and the the tax you pay as the y-axis, you're going to get a piecewise function, okay, where each tax bracket is its own little line segment, and the slope of each of these line segments is going to be steeper and steeper as you move from the line segments on the left to the line segments all on the right. Okay, so but we'll get into a little bit more of that later. But for now, the question is, how do you compute your federal taxes? Well, there's the concept of taxable income. So you only pay federal taxes on taxable income. And your taxable income isn't your actual income. It's the income that you get after you apply your standard deduction. Now, in 2017, you used to have a personal exemption, which essentially added to your standard deduction. In 2018, they changed it. They got rid of a personal exemption and just made a flat standard deduction. And what this means is in 2020, the first $12,400 that you make, you will not pay any federal income taxes on. Then after that, you are in the 10% tax bracket. And in that bracket, which goes all the way from 0 in taxable income all the way up to whatever, or 9,875, you're going to pay 10% of every dollar that you make in that range. Then after that, you're going to pay 12% up to $40,000 in taxable income. Then after that, you're going to pay 22%, and so on and so on. So now, how would I compute how much federal income tax somebody is going to owe if I know that they're filing singly and they're not itemizing deductions, so they're just going to take the standard deduction? Well, first of all, you would subtract out this amount from what their income is. So in 2020, you would subtract $12,400. Then what's left over, you would go to the tax table and you would say, oh, this person made $50,000 after their of taxable income. Well, $50,000 they're going to pay this month. 4617 plus 22% of the excess over 40,125. Okay, well, I would, and I'll do this on a calculator. Let me go to my calculator. Where is it? It's not on here. Interesting. Okay, so my example of $50,000. You made, that was your gross income in 2020, or then you're going to pay, let's see, $50,000 falls in the second tax bracket. So you're going to pay 4617.50, which is all the money that you made up through the first tax bracket. Oops, hang on. Then 22% of the amount in excess over 40,125. Well, what does that mean? It means plus and then 0.22. How do I find the amount in excess over 4,025? Well, I do 50,000 minus, and then that would be minus 40,125. Okay, that's the amount in excess over over how far over 40,125 was, and then I multiply that by 0.22. So that gives me, come on, calculator, $6,790. So that would be my federal income tax if my gross income was $50,000. So gross income is usually what well, we'll save discussing gross versus net income for another day. Just know that's how you compute a tax, a single person's tax. You subtract the standard deduction, and then you figure out that gives you the taxable income. Then you look in the table and you say, okay, I'm in this tax bracket, so that means, for example, I made $175,000 in taxable income. That means I would pay this much plus 0.32 times however, subtract the income minus 163,300 and then multiply it by whatever that percent is. Okay, so for homework, I'm going to give you specific incomes, and for 2020, assuming it's for 2020, and I want you to come up with how much tax that person would owe. So I'm going to give you incomes. You're going to have to subtract the standard deduction. So right off the bat, you would subtract 12,400. This is assuming that income is from someone who's single and going to claim the standard deduction. And then you would go to the table and you would do the computation. All right. So we'll pick this up more on Tuesday, but for now, we'll call it a day for today.